Hi everybody.
Hello.
Hi
Hello.
everybody. So
Hello.
Hi.
today is already our 9th session that we're organizing out of FinTech Belgium. And today is really like a session I looked forward to, because this one is about post-COVID financial advice from the people who have their finger on the pulse of our economy and of those that are struggling maybe with liquidity and also advising the government. And so, first of all, big thanks to Caroline, who has put together this other great seminar and speakers lined up for us for the next hour. As always, on the right side of your screen, we really urge you to be interactive. So we will launch a few polls for you, so you can answer those to give us a feeling about how you see these things evolving, but you can also ask direct questions or join the chat if anything interesting comes up where you want to jump in the discussion. And so I would say, without further ado, I would like to introduce Jean van der Spek, who works for PwC and who is in the privileged position of advising our federal Belgian government on the measures that seemed best and most appropriate to help the economy through this tough time. And so Jean will open. Afterwards, we will have Nicolas, who will prepare. We're allowed to call Nicolas Alexandre Verdois Nicolas, right, for this call. How Look&Fin is actually seeing the SMEs and the startups coming to them for financing needs. And after that, we'll have Mathilde Levy, who will share us a little bit more government agency perspective on how scale-up startups and SMEs have solutions, especially in the Brussels regions, to cope with this. So without further ado, we're launching this session. And I would say, Jean, I know you prepared some slides for us. Maybe you want to do a very short introduction on yourself and then launch your slides in the meantime.
Well, thank you, Toon. Good afternoon to all. Being lucky to work for the government, I don't know if that's the right way to say it, but in any case, that's what we do. So yeah. I do have a couple of slides, and I will try to show you what we've been doing. I work for PwC in corporate finance, and
we can see your slides now, so that's great. If you can maybe raise them to the full screen, that would be even better.
That's
great. Perfect. It's okay. We can see your own notes on the next slide, but that's quite okay. Everybody will will enjoy that feature too. Yeah, that's even better. Thank you, Jean. That's perfect.
Better? Okay.
Yeah.
So we've been working since really the first day of the lockdown, literally.
Wow.
On March 15, we've been called by FBI to put together a team of experts and have a mission which is twofold. One is to help SFPI assess what the impact of the crisis would be. And the second aspect of this mission is to help design and propose a number of solutions to the impact of the crisis. So very rapidly, in fact, all people involved have been shocked by the magnitude of this crisis and realized it would be extremely...
I'll interrupt you for 1 second, Jean, because for you it's normal who SFPI is. In the Dutch equivalent is FPIM. It's the Federal Holding and Investment Company, right? So that's the legal entity managing the federal government shareholdings.
Yeah, you could say it's yeah, you're totally correct. You could say it's the Belgian sovereign fund. It's got a number of missions, but it's on the one hand a private equity or public equity, if you like, type of investor. On the other hand, it's the financial arm of the state and intervenes in cases of crisis, which it has been doing in 2008, 2011. SFPI has the different financial participation of the Belgian state. It will use Fortis, BNP Paribas. It has Dexia, Etias, and so on. So the concern was to see, based on that position, what the impact of the crisis would be. We've been working that at the very macro level to begin with, and then starting from global impact on the country, on its economy, went down to micro level, to individual sectors, subsectors, clusters, name it, to the level of companies. Realized that it would be of an unknown magnitude, it would be extremely acute. It would be global in terms both of economy and geography, and would have severe consequences on liquidity and solvability of companies.
Okay, and I'll interrupt you another second. We're asking in the polls now how big our attendees, our virtual attendees, are estimating the GDP drop that we will have as a result of this for 2020, for this year. So if everybody who's online wants to give their best guesstimates, feel free to join us so we can compare with the numbers that PwC has compiled on this. Please move on, John.
Okay. You'll see passing by here in about 20 seconds, one of the famous US indicators with its jobless claims. The graph starts somewhere in 1960 or 1965 to end up at 3 or 4 weeks from now.
Yeah.
This is the weekly jobless claims in the US. So anyone doubting that this would be a severe crisis, I think this not only answers the fact that it is severe, but also explains why President Trump sometimes is a little bit nervous.
And this is the type of graph every entrepreneur dreams about, you know, the hockey stick that goes stellar, but it's not nobody dreams about this sort of unemployment. So it's a nightmare for everybody involved, both on the employer side as the employee side. It's quite shocking if you put it in this context. The numbers are just crazy.
So based on that, and based on financing concerns, liquidity and solvability, what are the measures that have been taken? If we talk about Belgium, I think that I mean, this is obviously not an exhaustive list, but highlights the main measures that have been taken. And I must say that in terms of liquidity, we have really the conviction that the state's been acting really fast and efficiently. Temporary unemployment, has been put together extremely quickly. Taking care of people in these circumstances is really something critical. It's been allowing also companies to reduce their costs and not to be neglected, but also allowed to sustain consumption. Besides that, a set of payment postponement measures have been taken, and these have been taken both at state level, mainly taxes, of course, VAT, personal and company taxes, social security. It's all been done in the private sector, so banking and financing. You've been given, companies and individuals been given the possibility to postpone capital repayment, be it on mortgages, leasing, and extremely important also, consumer credit. Then the state guarantee plan for new credit has been put together. I understand that one is regularly criticized, both by banks that consider it's not favorable enough and too complicated, and some users consider also it's complicated. But nevertheless, I mean, at this stage, I think that on the 50 billion envelope, something like 20 billion has already been used. So it is something helpful. To end up, fiscal measures, I think one can say there that Belgium has been both creative and daring. Two measures. The first one is more liquidity, I would say, and it's carryback. Quite extraordinary. In 2020, under a number of conditions, you'll be able to offset results of 2019, i.e. back in time, and offset taxes that should have been paid on these results. And the second one, which has more to do with solvability, and which is a tax-free reconstitution reserves, i.e. you can, based on estimated profits for 2021 to 2023, constitute reserves that will help improve the balance sheets of companies that will use that. In terms of solvability, I must say that it is maybe a little bit less rosy, we're less convinced there. There are measures that are still taken ad hoc, both at federal level and at regional level, SFPI, but all the regional investment companies, PMV, CRIW, are all ad hoc intervening in emergency cases. But there is, at this stage at least, no structural measure that's been taken at the federal level. Some have been taken at regional level. Flanders has been giving an envelope of 250 million to PMV, Participatie Maatschappij Vlaanderen, in order to grant subordinated loans to KMOs, SMEs. So that's positive. Finance Brussels has been taking a number of measures, but I think we'll leave that to the next speaker.
Yes.
If I said it was disappointing, but might be changing, this is what's been published in the press today. So I guess the government or the meeting is still on, or at least there's been no communication, but a decision could be taken today on a potential of 8 billion to allow companies to access free or vers capital, not easy to read in one language and speak another one.
Okay, and coming to language, there was a question on your previous slide, which was talking about solvability, in French, solvabilité. Kevin Murray points out it's probably more about solvency. Is this something you relate to, or you say it's...
Well, yeah, okay. If you prefer the term solvency, obviously it's a question of how solvent are the companies, what's the level of equity, and how can we reinforce solvency in order for companies to be able to relaunch their activities.
And I thank Kevin for the question. I can already point that next week we have one about credit and credit ratios. So we'll dive further into solvability next week for those that want to get to know all the details on that one. So thanks for that, Kevin.
It brings me to the next question. I don't like this slide, so I'll pass it very quickly. But key question is how will the recovery look like? Yeah. And let me briefly go through this slide. We are following this up, I mean, extremely on a daily basis. In fact, the National Bank is providing a lot of data, and all of that is analyzed. It shows you the evolution of added value since the beginning of the crisis. So in fact, the drop started in early February. Mid-March, obviously, lockdown, and we then dropped until April. We're now somewhere here, recovering and deconfining progressively. The two questions I would say that remain is how quickly are we going to go back to some kind of normal? And how quickly are we going back to the situation early this year? And final question, which is something everyone is looking at and wondering how to advise, how to anticipate. I'm sorry, is will there be yes or no a second wave, and when will that happen? Somewhere in autumn after the summer.
If I take the results of our poll, it's a perfect distribution, 33% -8, another third -10, another third -12%. So everybody thinks it's going to be a big drop. And if I look at your graph here, depending if we're going to be hit by a second wave or not, it's even the -12% might even be a positive view on the drop in GDP.
So not optimistic, but
no.
I'm afraid probably close to the reality.
Yeah.
So what's next? I guess that for CFOs that are listening here, we are faced to something which is quite dramatic. PwC made a brief inquiry to a number of CFOs, been publishing this 2 or 3 days ago. By the way, you can find it on our site. Without going into the details, I think the key question now is what is your exit strategy? How are you going to manage the situation based on what happened, changes that have been imposed to us, have been imposed to our companies? There's no way I think we are going to go back to a normal situation or a pre-COVID situation. So get ready for that. I mean, really study what the impact is on your company, on the new organization you have to put together. And as we keep on learning, let me perhaps finish with a smile. We are also learning to use some new words and new expressions. Yeah. And from EBITDA, we'll go EBITDA before coronavirus or after coronavirus.
Yeah.
That's about it for my introduction. So thanks for your attention, and be happy to take questions if any afterwards.
It's great. There was one question that we maybe can from Daniel Verbruggen, who's asking if this is going to be a real catalyst for change, or will we return to the traditional growth as we've known it before? Do you have any views on that yourself, with the knowledge of the last numbers that you have to the privileged access and the government data that you get on a daily basis?
Well, I definitely think that besides government and data, I definitely think that we're going for something else. I mean, I don't know whether you will put it within the polls or not, but to me, some of the questions are, when is your next restaurant? When and how are you going to do it? You're going to do it with someone you've been confined with for the last 10 or 12 weeks. I love my wife, but I mean, sometimes I want to see friends also. I mean, when are you going to have your next beer? You're going to fly at the point in time. I mean, and this is not only about fun. If we're not flying, I mean, you know, all the consequences from industry, hotel industry to aluminium producers. No, definitely, I think we are not going for a back to the world before. It will be different, and it will take time.
To answer two of those questions, we just launched the polls. When will you fly again? 42% 2021. So they do not foresee to fly this year anymore. I know that FPIM and your government customer is also involved in the talks to support Brussels Airlines. So of course, this sort of we have to assume that the people watching this FinTech webinar are the ones that usually fly and travel a lot for business purposes too. So half of them probably won't do that in the short term. And we see that 1 in 3 months, the other one is still optimistic doing that. When it comes to restaurants, 31% does think it will happen in 1 to 3 months, and 54% wants to go ASAP. So there is a clear need for that. I can tell you, I personally, I closed a business deal this morning. It was my first handshake. Of course, we washed it with alcohol gel afterwards, but it feels really weird when you go through those what used to be normal things to seal a deal. So yes, please, let's have restaurants very quickly, and I think the restaurateurs will be happy to see us too and help them out. So Jean, thank you very much. We'll take more questions at the end of this session. Very, very interesting numbers and some hope in there too. Nicolas Alexandre Verdois, we're going to move on with you and Look&Fin. Look&Fin is a Belgian fintech, a much appreciated member of our organization. Tell us a little bit about what you've seen happening as a, if I can say, crowdfunding platform, and you can explain the differences and how you position Look&Fin within that ecosystem of alternative fintech financing solutions.
Yes, perfect. Can you see my screen?
Yes, well, we saw your screen. Now it's gone. Now it's back. So if you go to the next slide, we know it's you, or if it's still the previous. Yeah, that's you. We see it perfectly well. Go ahead.
Thank you, sir. So the agenda, maybe for my part, the presentation will be structured in 3 parts. I'll start with a brief introduction of what's crowd lending and introduce Look&Fin as an alternative funding solution. I'll continue with a description of the impact of the COVID crisis and how we reacted and dealt with the situation. And I'll finish with an introduction of our new product to help SMEs recover from the crisis. Okay. So maybe just a brief introduction of what's crowd lending. Well, crowd lending is one type of crowdfunding. I don't know if people know crowdfunding, but it means literally the practice of funding a project by raising money from a large number of people. There are basically 4 types of crowdfunding. The first one is donation, where contributions go towards social causes or charities. The second one is reward crowdfunding, where investors receive a tangible reward or service in return for their funds. The third one is equity crowdfunding, where the investors receive a stake in the company in return for their funds. And the last one is lending, where the investors lend their money and are repaid over a predetermined timeline with a set interest rate. The important thing to know is, in fact, that crowd lending is by far the biggest type of crowdfunding and represents 70% of all transaction volumes worldwide. But you have indeed 2 types of crowd lending. The first one is peer-to-peer lending, where individuals finance other individuals. And the second one is P2B lending, where individuals finance businesses. And thus, P2B crowdlending allows SMEs to borrow money directly from private savers. What are we doing at Look&Fin? Look&Fin is indeed a crowdlending platform that was created in 2012 in Belgium. We're currently licensed as an alternative funding platform by the FSMA. And we are active in Belgium, France, and Luxembourg as a market leader in Belgium and in the top 3 in France. And since our inception, we raised about 80 million for more than 230 SMEs, and already 40 million were paid back to the investors. Look&Fin realizes since its inception also a yearly growth of 100% and offered a realized internal rate of return of more than 5% net of default for the majority of its investors. What do we offer concretely and what are the advantages? We offer unsecured and secured loans. So that means in terms of depending on the collateral, those kind of loans are very flexible. So it could be an amortizing or bullet loan or a loan with a grace period with amounts ranging from 100,000 to 5 million and a maturity short, medium term, 6 to 60 months. And interest rates that are ranging from 2.5 to 10%, also depending on the collateral, secured, unsecured. And what is the main advantage of those kind of loans is that it is a subordinated loan that are considered by banks or other investors as quasi-equity, and that makes it possible for the companies to have a leverage effect on bank loans. So you take a small part of your funding needs with Look&Fin unsecured, and then the rest is financed by a typical or classical bank institution.
Yeah.
So how did we react and what were the main points when the crisis started and that the lockdown was set up? Well, first of all, week 1 we analyzed the situation and we defined a clear action plan. The second week, we contacted every portfolio company and we made an assessment of their current situation and we gave them a color, so green, orange, or red. The green color was for companies that were not or slightly impacted by the crisis. Orange was for the companies that were impacted, and red was for companies that were heavily impacted. And so on week 3, we were able to grant grace periods of 3 to 6 months for those red companies to help them in the difficult times. And in week 4, we polled our investment community to know about their willingness to continue to finance the real and local economy.
Okay.
And as from week, yes?
I was going to ask, do the Basel norms also apply to you? Like classical banks, they have to do this on a regular basis on their portfolio. You're using 3 colors, green, orange, red, which seems a very hands-on and workable solution. But our banks have to do this in I would say, in a more detailed or granular way, from what I know. Does it compare? Because I understand that you do not have to formally report as a bank, right?
No, we do not formally report, and we had no colors before the crisis.
Okay.
So we put a
this
simple,
okay.
It was new, just to assess the companies and to assess our global portfolio. And then as from week 5 till now, we had a weekly call with the red companies, a monthly call with every green and orange ones, and we relaunched as of week 5, new investment opportunities on our platform.
Okay, wow. Very reactive, I must say. So it shows that that's also the advantage you have. You have the resources to reach out personally to each of them. I think that a classical bank did not call all of its customers to know how do you feel you're doing and do you need any support from us. So that's one difference I observe here in the way that you manage your portfolio and how those with a larger portfolio struggle to keep the finger on the pulse with the directors of those companies.
Every analyst at Look&Fin had between 30 or 40 companies to contact, and so it was possible to do that in that way.
And did you, out of personal curiosity, are these calls purely financial, or are you also providing mental support for those that are in stress, like advice or cheer up, or Because nowadays, when you do a business call, this is part of the empathy that we feel with our business partners, right?
Yeah, surely. So that was in week 2. So week 2, there was a lot of questions, a lot of uncertainty, and so we managed also to share information from one company to another. Maybe
that's nice.
A special help and everything. So indeed it was also a discussion and made it able to have some information. And so what were the conclusion of this action plan? That may be also interesting is that
absolutely
5% of the portfolio companies were heavily impacted, so with a red flag, and we granted grace periods for 35 companies. Out of a poll, we could see that 92% of our investors were still willing to continue to lend, but they wanted a partial or total guarantee or kind of form of guarantee. And 78% were also willing to grant a minimum of 12 months grace periods. So based on this, we decided to launch a new type of loan to help those SMEs to recover from the COVID crisis. And thanks to our close follow-up of those portfolio companies, it made it also possible for us to understand the problems they were facing. So as Jean mentioned, we could see 2 problems arising. The first, a liquidity crisis, and the second one, a solvency crisis. So the liquidity crisis, indeed, when a SME has less revenues, that means there's a quick need for cash. As Jean said, also the government took quick action with also 2 banking measures. The first one was banks granted grace period, as we did. And the second one is now the well-known bazooka measure from the CRO. So it's 50 billion euro guarantee from the state for the new short-term bank loans. Watch out, those are loans only for 12 months bullet. So it's very, very short-term to respond to this liquidity crisis. But after the liquidity crisis, SMEs will be facing also a solvency crisis. The losses from 2020 will effectively decrease the equity of the company and also downgrade their credit worthiness. And so the least capitalized SMEs are particularly vulnerable and must strengthen their equity in order to be still able to overcome the crisis. And to do this, the federal government has recently adopted various tax measures, as mentioned, Jean, to allow the SMEs to strengthen their solvency, like the COVID reserve, the reconstitution reserve, and measures encouraging additional funding remain under study and are essential. We heard various calls from academic, political, socioeconomic world to mobilize private savings to strengthen the SME's equity to overcome this solvency crisis. So when we are mobilizing savings to strengthen the equity of SMEs and relaunch the economy, we heard the call at Look&Fin, and we didn't wait until the implementation of specific measures from the government to act. And we launched last week a new type of loan. We called it the recovery loan. And it's a type of loan dedicated to SMEs looking for solutions to start a recovery and sustain their activity by strengthening their equity. So in other words, it's a loan designed to give businesses time to recover. The main characteristic of this type of loan, it's still a quasi-equity loan, so with a maturity from 3 to 5 years, and very important with grace periods from 12 to 24 months. As I said, it's designed to help SMEs to recover. The business needs time to recover. The amount is ranging from 50,000 to 500,000. And a new feature is the early repayment possibility at any time without any cost. If the business can recover quicker than expected, the company can pay the loan back or have a new loan at the bank and pay the subordinated loan quicker back. And interest rate is still starting at 2.5%. Everything is made digitally. And so we encourage we can give a response to companies in 48 hours. and be flexible and reactive. What are indeed the advantages of those type of recovery loans? Well, the first one is really to strengthen the capacity to overcome the crisis. A lot of experts estimate that SMEs will need a minimum of 2 years to rebuild their equity before the crisis, and by doing so now, SMEs will be better equipped to face the consequences of this health crisis. The second advantage is the fact that it's a complement to bank loans. As I said, and as Jean said, those short-term bank loans, they provide a solution for the first problem, the liquidity crisis, while the second solution, the quasi-equity provided by Look&Fin, can be used to address the solvency problem. And by increasing equity right now, SMEs strengthen their financial structure for the long term, and is not just answering a short-term problem. And then the last advantage is to diversify the sources of funding. SMEs will thus limit their dependence on a limited number of bank creditors. And this is particularly advisable in a context that could be characterized by a possible tightening of the conditions for granting credits. So that's a short summary of our solution towards SMEs and towards the relaunch of the economy. If you want to try it, you can submit your funding request and get a response in 48 hours on lookandfin.com. So Thank you for that attention.
That was a very good call to action at the end of your pitch. So people will those in need will find you. I suggest that although we have some questions, we go on to Mathilde Lévy as our last speaker, and we'll have some more time for questions at the end then. So okay. I would say, Mathilde, so thank you very much, Nicolas Alexandre, for your great explanation and the call to action. And Mathilde, go on and tell us a little bit what you see happening, because you are following both startups, scale-ups, and SMEs for the Brussels region.
Yes.
So tell us a little bit more how that has been going and how your weeks have been playing out, just like Nicolas just told us on those on his planning.
Exactly. Thank you. Thanks a lot. So hello, everybody. My name is Mathilde Lévy. I'm investment manager at Finance and Invest Brussels. So we're the public investment fund of the Brussels region. And what you have to know is that Finance and Invest Brussels, it's private company, but the shareholding is 70% is the public region, so the Brussels region, and 30% of the shareholding is private investors such as bank or insurances. So Finance and Invest Brussels, we have the capability to invest at all the different stage of the maturity of a company. We start at the seeding stage, and we can go up to the scale-ups, the more mature company, and then the companies that go internationally. We have different financial tools to help the startups and the companies within the Brussels region. And what's really important for us is to help these companies develop themselves and create value for Brussels. So that's really what's in our DNA, let's say. So it's really the creation, the employment creation, but it can also be the environmental or a social impact on the region. We can invest. We've got different financial tools, and I'm not going to explain them today. But if you have questions, feel free to ask them. But we can intervene in equity, in different kinds of loans. So we have subordinated loans, we've got convertible loans, and we also do bank co-financing for different projects. But let's say that for the startups and in the seed stage, we'll be in equity in convertible loans, because the reimbursement capacity is often not there. And then for more mature companies, we can go on subordinating loan and co-financing.
Yes, and maybe to point out that the convertible debt, because we always get a lot of questions about that. It's an instrument where you start out with a debt, and when there's a certain liquidity event or certain conditions are met, it is prearranged. It can be converted into shares, right? And you become the shareholder and no longer the lender to the company. So that's the convertible debt.
Yeah, so exactly. And often at Finance and Invest Brussels, what happens is that we start with a simple loan or a standard loan on 5 years time. And during the 2 first years, we have the possibility to convert the loan in equity. But if there's a new funding round, so we have, that's generally the liquidity event for us. But it can vary from one project to the other.
Okay, great.
So what have we been doing since the beginning of this COVID crisis? So first of all, we've continued investing. So we stayed open. We started by focusing on our portfolio companies. So we have companies that we're in equity, where we have companies that we have granted loans. So for the company we have granted loans, all the analysts, and for the companies in equity, but all the analysts have called the different managers to see how they were doing, to see the different measures that they were going to take to try and help them or give them the information on the measures that they could take. And then for the companies that we had, for which we had granted a loan, we have been able to give a 6 months grace period to help them pass through the crisis. And then on the other hand, so we followed our portfolio, but we still have had projects coming in for startups, scale-ups, or more mature companies that had business that was continuing. And so we have continued analyzing project, but it's true that with all the work on the portfolio, it's been they have been a bit of delay on the decisions, but it was there. And then the Brussels region has asked us, we have received 2 specific missions from the region. So the first one is for the HoReCa sector, so for the hotels, restaurants, and the bars. We were granted with 40 million euros to invest in suppliers of the Brussels HoReCa sector, or for the bar, restaurants, and hotel, but that had more than 50 FTEs within the Brussels region. And so these are loans without guarantees and no negative pledge and no pari passu. So you can say that it's quasi equity for the company. So that's the way that we are trying to help the HoReCa sector for the moment. And there's a second mission that was granted to the Brussels Regional Fund. So the Brussels Regional Fund can come and give guarantees to the bank loans, but that are more than 24 months bank loans. So it comes after the first federal measure, for the bullet bank loans. So that's something that can be interesting for companies that have to have a longer runway than the 12-month bullet.
I think that's an excellent measure, because I hear a lot of people being very hesitant because they know that things will not, this debt will not evaporate, and they know that the recovery will take more than 24 months. For those that really need it and might not spike their revenues straight away, they will need more. So it's nice to know there is that the Brussels region thought about a follow-up to not have them, put them in problems in 24 months.
Yeah, and the idea was not to have the same, do the same product, and so to find a solution that could be complementary.
Okay, and can you explain a little bit more about the no negative pledge and the no pari passu?
So that means that so we grant a loan without guarantee. And if the company wants to go to the bank and the bank says, okay, I will give you a complementary loan, they don't have to come to us and ask us for the permission to give a guarantee.
Extra.
An extra guarantee. So the bank really can consider our loan as a loan that doesn't come and eat the guarantees that they could take to guarantee the further bank loans that could be given to the companies.
So would it be correct to label it as subordinate, coming after the bank loans, or not exactly?
Well, it's a way of doing a subordinated loan. Yes,
okay,
exactly.
Very good. Thanks for the explanation. Very, very interesting instruments. And of course, the HoReCa industry in Brussels, which was largely event dependent. If I think about hotels and many big evening sessions at restaurants being for expats and commission related things, it's clear that's heavily hit. Do you have any news? Because you say the ones in good financial health, because we know that the HoReCa industry was already, since the introduction of the white casa or black one, however you want to label it, depending on the language, was in a tough financial, I would say, official financial health position. Is there anything more you can say about that? Because it seems to me a very tough decision which ones were healthy on the 31st of December.
What we look at is are the different financial figures, and look at the balance sheet and see what's the equity situation of the company. So that's more to see also if the company has the capability also to reimburse the loan and has what it needs to restart after the crisis. So that's important, because here we're talking about loans and we're not talking about equity, and so the company has to have
reimbursement capacity.
A reimbursement capacity. So it's really important.
But so a restaurateur that has the means and believes in the future, they can strengthen their capital base, improve their balance sheets, and then they could qualify for such a loan, if I understand it correctly.
Yes, exactly. Exactly.
Very good. Okay. Thanks for the extra explanations.
No problem. And then last of all, I wanted to maybe talk to you a bit about the feedback that we have heard from the field, speaking to the different companies and to the different entrepreneurs of our portfolio. So what we have seen talking to them is that they've been confronted to different types of problems. So we have had companies that have had to stop completely their activity, because we know the HoReCa sector, but also all the companies that were working in the medical sector have had all their activities that have stopped. All the sales couldn't go anymore, couldn't do any more sales and speak to the different practitioners, because they were too occupied with the crisis. And so on the short term, this has been there has been really cash problems of different magnitudes, depending also on the capitalization of those companies. Because companies that had, let's say, 3 to 6 months of runway, cash runway, could manage by going into hibernation, trying to reduce all the costs, and are able to pass through the crisis. But this has it was one of the first problems for all the companies. Talking to them, it's true that there's a real uncertainty about the recovery. When are we going to restart the activity? At what pace? Because that's really important also for the HoReCa sector. When are we going to come back to normal activity, knowing that it's really going to take long? Some of the people we have talked to on the field about within the HoReCa sector, they say that it will not come back to normal until 2 years' time. So also the questioning about what are the changes going to be in the consumption habits of the people? How are they going to react when the everything's going to open again? So that's really there's a lot of uncertainty on that.
And a lot is linked, of course, because we heard about Samsonite
Yes.
today firing
Yes.
people in Belgium and abroad because their
Right.
stocks are full with the travel luggage,
Yes.
and without travel, nobody buys new luggage. So yeah, the secondary effects go wider. And I was very surprised when you just mentioned the health industry, because everybody expects the health industry to be really held by governments to recover and in a more, I would say, balanced way after this crisis, to be better prepared, and also to thank them for the extraordinary job they've done.
Yeah.
But so right now there's no sales happening, but you know that is going to be a temporary effect there. So
Yes, but yeah.
Go ahead.
No. Sorry, excuse me. No, but it's true. But on the health sector, it's more talking about the companies around the health sector that are developing different projects and different products, and that really need to be in contact with the doctors. And it's true that this link hasn't been possible anymore, because let's say on the field, all the operations were stopped, all the so different that's so there was really a loss of activity there. But many companies have been able to do a strategical pivot and to think about a product that could help during the crisis. So that was also something, but I'll come back to it later.
Great.
But it was interesting. A third effect was also we were talking about the credits with the federal guarantee, but many companies have come back to us telling it has been, and it still is, a bit difficult in raising these credit with the federal guarantees. So because these are credits, bullet credits, so for some of the companies, it's not a solution, and it's not easy to reach to these credits. And within the ecosystem, there has been also delays and postponements in the fundraising rounds. So for startups that were passing from a startup to a scale-up phase, this has been also a problem for them, because if they are running out of cash, and this is taking longer than they expect. So that's also a point that we see in our portfolio. And last,
I have a question on that one, because in one of our earlier webinars, we had Claire from the Business Angel Network, and she was saying that they didn't see real drops in valuations. So this was in the early weeks, and this was in March, if I'm not mistaken. How do you feel about that now? Do you say, valuations have come down as the need goes up, and the negotiation position of the ones with the money is stronger than the ones who need it urgently?
Well, for the moment, we see that from the, let's say, the entrepreneur point of view, the valorization are not really going down. But it's true that in the negotiation, we can see that the negotiations are tougher. That the valuations are maybe going to come down a bit and reflect what's happening on the field. So so that's I think, but I think we're going to be we'll have more feedback within the following weeks and the following months, because I think it's going to be a raising problem. And last of all, in a different problem that was on the different problems that were pointing out, many payments have been postponed. So this could bring a risk of default within the following months, depending on two factors: if slow recovery, and if there's no cash reconstitution. Do we still hear me? Yeah.
Yes, we hear you perfectly fine.
I didn't. I saw it. Okay, perfect. From a more maybe HR perspective, it's more what's happening within the company. many companies have told us that they have had illness and absenteeism problems, and this can be also a problem for the companies, because for the 31st days they have to pay for that. So it can be also a cost that can have an impact on the companies within the Brussels region. Today, the question is also, do all the employees want to go back to work? Are some of them afraid of coming back? So there's going to be a new way, I think, of working. I see that at Finance and Invest Brussels, we're also thinking about how can we work? Do we work partly at home, or do we come back to work? And also, sometimes for some companies, they have had significant additional costs to reopen in accordance to the instructions. So that can have really a cash impact on the companies. And so what I would like to remember about all these different feedback, and what I've found really interesting and really encouraging, is that I find that the companies have had the ability to get into hibernation, and to be able to cut all the cost and try to manage their cash flow management, and the ability for some of the companies to pivot during the crisis to say, okay, now I can do, my activity doesn't work, and I don't have any more revenue. So what could I do to create an additional revenues by creating a new product or new service, or doing something completely different? But this has brought for some of the companies more visibility and helped them also pass through the crisis. And so that I find really encouraging and bringing a lot of hope, let's say. And for me, what's really important within the crisis and also the restart of the activity is to say, okay, you have to really work on your cash management. It's really crucial. Keep contact with your clients for the payments, but also when you're going to restart your activity. So to be sure that you've always stayed in contact with them, and also look with your suppliers what you're able to do. And for companies that have a board of directors, I find that the support of the board of directors to the management of the companies have been quite important and helpful for the managers. So that would be about three things about the feedback that we have heard on the field. Thank you very much for your attention, and if you've got questions, feel free to ask them.
That's a perfect introduction to the next 10 minutes, Mathilde. So big thanks for bringing such a clear view on how you're helping the economy. And I said again, because this is regionalized in Belgium, the equivalent is there for the Flemish and for the Walloon Brussels part, I would say the Walloon investment agencies. Can you give us the right name again? I'm struggling with it now.
La SMEW.
That's the one I was, that's indeed the one I was referring to. Thank you for that. So if we take the questions, there is we see, I'll start with the one from Chris Schulz-Carvalho. Will we see capital being given to companies, or is it more being loaned? I maybe start, Nicolas, with your answer, and then Mathilde with yours, if that's okay.
Mm-hmm.
Mm-hmm. As we see it now, it will be loaned, but with a guarantee from the government. So it's still risk capital, but the government is there to guarantee part of it, of whole of it, depending on the measure. The bazooka measure is a split, a share split. Maybe Jean can give some more information, but a share split between the risk of the bank and the risk for the government. So till 3%. Default, it's for the bank, and between 3 and 5 between both, and if more than 5.
I'll let Jean complement on that, because I understood it the same way, but it's for each bank on its own, on their portfolio under the bazooka measures, right? That's how I understood it, Jean. Is that correct? I think you're still muted.
I think it's for new credit.
Yeah, no, we hear you. We hear you. Fine, go ahead.
It's the 50 billion envelope is designed for new credits. So existing credits remain as they are. New credits given under the state guarantee, you've got that progressive share of the burden, if there is one. So from 0 to 3%, it's for the bank. From 3 to 5, there's a split between, which make a lot of people say, listen, banks, if things go mildly bad, it will be 100% for the banks before we hit the thresholds where the state is going to intervene. So there's a lot of criticism. Well, once again, it's quite easy to criticize. It's been done, it's up and running, and 20 billion has been given out. So it may be not the best solution, but it's there. Now, I don't know if Chris' question is when he says capital, we're talking about loan capital or capital in the sense of equity. If you talk about equity, all we are looking for, I think all of us, is intervene in equity and at a point in time be paid back one way or another. So it's not a loan, but it's something you would like to see coming back under the form of whatever dividend or so.
Yeah. That's great. And maybe if we pass, thank you for that answer, Jean. Pass it on to Mathilde, because you see, you just gave the feedback from the markets and especially our SMEs that they find it very tough to get to this bazooka guarantee type of money from the banks. Can you say a little bit more about that? Because many have the feeling only the large companies that are well organized and have nice balance sheet to show can access this type of financial product and get it from their bankers.
Yeah, well, I think that the loan in the bazooka way, it's more it's more complicated for the startups to get these kind of loans, because they don't have the capacity, and to have a bullet loan and after 12 months to have the reimbursement in one time, that's really difficult. I think that for the more mature companies or for the scale up, and if they have a reimbursement capacity, then those kinds of loan could be good. So that I think it's for maybe one type of company that's in more the seed stage, that it's not the good type of it's not the good type of financing.
Okay, thank you for that. I will take the next question from Jean-Claude Jossard, who's asking, what about globalization and European reindustrialization? So our dependency, and let's speak it out, towards China as our new factory, and maybe becoming more reindustrialized in the European Union itself. Jean, do you have an opinion or numbers on that, where you say this is a policy goal or this is a industrial goal for European decision makers?
Well, I think you hear it expressed by a lot of politicians, the fact that we've been so dependent for a number of things that were considered absolutely not critical, that became critical in matter of days or hours, be it masks or gel or whatever. Now, from there to reindustrialization doesn't astonish me from Jean-Claude to raise that type of questions, but I mean, we all know it's an enormous step. I mean, we've been now for the last 20 or 30 years going in a different direction or the opposite direction. So turning all back at once, extremely challenging. But for certain aspects, I would say yes. I mean, you will never have T-shirts made here again as they are made somewhere in Asia. I mean, doesn't make sense. They'll change. We'll wear some shirts instead of T-shirts, but you will not get that back here. I don't think so.
Okay, well, never say never. We'll see about that. And when you said you don't think things go back to normal, there's the European Green Deal. Do you see that as an element, to come back to your T-shirt example, that maybe some people or some policymakers say, no, we should produce that with, I would say, ergonomically and ecologically friendly cotton?
We had a discussion this morning, because I mean there's still a number of works ongoing on how should the state intervene in terms of equity or quasi-equity, and one of the questions that is coming back at all discussions is you have to use that in order to accelerate the transformation. You have to be more, it's got to be more social, it's got to be more green, and it's got to be nicer. I mean, we cannot go back to what was considered as the normal, and certainly not that the state is helping directly or indirectly via the different forms it can help the economy. But it's a willingness to go to carbon free and this change in the way the economy is organized today. Yeah.
And big thanks for confirming that this concern is on the table and actually being used in negotiations. Also knowing that your customer is the legal entity that will have to save or give funding to Brussels Airlines, where this is one of the very touchy discussion points, of course, in helping them out in the short term. So thanks for confirming that. If we look at a question which is directed to Look&Fin. Like, is early repayment allowed by the FSMA under your license? I feel it's a very touchy question from somebody in the know. So go ahead, Césaire, Quentin, thanks for asking it, and Nicolas, Alexandre, thanks for responding to it.
It's allowed by the FSMA, but it needs to be mentioned when the funding is made. So it's a kind of loan with the possibility of early repayment. And it's clearly noted for the investors. And then we can specify it every 6 months, every 12 months, of every month that the company has the possibility to repay.
Okay. And that also means repaying without a penalty, because that's what this is about. Yes. And in normal contracts, you get a penalty to pay back early because the money has been refinanced on the market. And now you say no more penalty. You have to take care of it, their financier, on your own. Yeah. So that's
but it needs to be specified for the particular project, so people are aware of that kind of risk, because it is a risk that you don't get the interest rate till the end of the loan.
Okay. And how hard, and this is a question to both Mathilde and Nick, how hard was it for your organizations to halt the payments? I know the interest payments are eaten, but the capital reimbursements, I hear from people in the banks that their mainframe systems were never designed for anybody to impact on that specific payment. They all struggle, from what I hear, in getting those capital reimbursements waived for a period. How did this go for you, Mathilde? How easy was it for you to halt and give a leeway there?
It was quite simple. So we're also let's say human type organization. So we have a number of projects, but we could do it. Each analyst was in charge of their project, and then we saw with our financial department and with the new reimbursement tables, and it was done quite easily. So
that's great to hear. And how did this happen at Look&Fin, Nicolas? I'll come to Jean right after.
Everything is digitalized at Look&Fin, so also the payments. So that means our IT team and back office team had a lot of work. So we worked closely together. So the analysts to contact the companies, make the assessment, grant a grace period. And then it was going to the back office team and the IT team, and they worked amazingly together to make everything happen.
Okay, and Jean, because you've been from PwC, you're also advising several banks and the government. What did you hear as a feedback on this, on the waiving of capital reimbursements?
It is much more complicated for banks, and one of the main reasons is that, postponing capital repayment means at a point in time you usually change the category of the credits. Nicolas was talking about green, orange, red. Then you talk about non-performing loans. You alluded to Basel and the entire calculation of equity, which is extremely heavy and complicated. So changing that, you do have to change the entire chain where the way you categorize the credit. So and it's probably even more complicated for some of the consumer credit businesses. So it's a tricky one. But it's doable. But obviously, IT people are not specifically happy with that. I agree with that.
Okay. And did all the banks that you advised in the meantime, did they manage to pull it off? Did they manage to waive the capital reimbursements, or are some of them still in the process of putting this into production?
Joker, I will not answer that one.
Okay, I'm just trying. I can always try. But we're happy to know that our two other speakers both pulled it off, and that's a very reassuring message. They're proving that fintechs can be agile and that governments can be very agile, or government agencies can be agile. So thanks for doing that so quickly. With having an eye on the time, we don't have much time left. I'll have a quick look if there's any more urgent questions. So Kevin Murray is asking, does Flanders have similar HoReCa facilities? I didn't hear those come through. Maybe Jean knows about it. I think that Brussels is even more impacted as a region because it's such a big industry compared to the entire service economy. So that's maybe a reason it was put high on the agenda in Brussels.
Yeah.
And it's typically an employment industry with lower educated people that get good jobs there. So it's another reason why you want to chip in there of not having mass unemployment we are lucky. We are knowledge workers, so we can work from home. You hinted at that earlier on. But going back to a physical location serving customers is a very different type of economic activity.
Exactly.
If there's no other urgent questions, I would like to thank all three of you for this excellent webinar with very, very interesting views. And I would give each of you 1 minute to close with some advice for our viewers or something your organization has learned. And I will start with the gentleman and end with you, Mathilde, and just have a last invitation. Next week, we'll be talking about credit risk, which tools are available, and how to look at that. So don't forget to join us for the credit risk management session next Friday, same time, 2:00. And on the closing of this session, I would ask Nicolas if you want to maybe start in giving us your exit minute, and we'll move on with Jean, Mathilde, and we'll wave off after that. So thanks for that, everybody, and thanks for closing it now, Nicolas.
Yeah, thank you, Toon. At Look&Fin, we saw that a lot of entrepreneurs, a lot of SMEs were first dealing with the urgent matters. So the urgent matters is the well-known liquidity crisis. So delay the payments, get the measures, the right measures to have a good cash management. And now we see that really the second problem is arising. So the solvency problem. And so we would like to accompany and also let the people know that they need to watch this problem because it's the next big problem in 2021, the solvency and downgrade of the creditworthiness for those companies. And so we're glad to help to solve that.
Okay, great. Thanks for that. Jean, you're next. What would be your closing address?
I would go in the same direction and would just try to add if we can have a further cooperation between federal level and regional level, between public entities and private entities and crowdfunding, crowd lending, any type of smart solution that helps to get out of this is something welcome. So I mean, the sphere is difficult, or the circumstances are extremely difficult, but the way people look at it and try to find solution is extremely constructive. So let's cross fingers and hope it keeps on going in that direction.
Okay, thanks for that positive end note. And so Mathilde, you get the last word here, so enlighten us.
So for me, it's true that we've been in a crisis that was unprecedented, and it was first of all looking at what we can do and a bit a panic way of reacting. But what I find really hopeful is to see all the entrepreneurs, how they have been able to pass through these last few months. And be able to be agile and to adapt themselves to the situation. And really, as it was said, it's really important to see that the solvency in the next few months is going to be really important for the companies. And so anticipate your need, come and see in time the different company funds, public or private, because we need to have the time to analyze the project. So it's important to anticipate your cash run. So that would be last
I think that's very, very good advice. So everybody, don't code the last minute, because then you will drop in the valley of death, as it's called in the startup world. It does take time to get these financing solutions, even at Look&Fin. You gave a 48 hours timeline, but so in practice, everybody knows this thing. So take good care of yourselves, everybody. Thanks for being here. We look forward to seeing you next week, next Friday. And with this, I would say, Mathilde, Jean, and Nicolas, Alexandre, see you around, and all the best to all three of you. Bye-bye, everybody.
Thank you.
Bye-bye.
Thank you very much.
Bye.
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 Bye.